It's your turn this week, too.
Is that?
Yep. I did it 2 weeks in a row.
Why are we acting like this is a chore?
Hey, I love it. I do. Wow. Hog the glory, folks.
What's good, everybody? Welcome to our open house. It's going to be held between 5 and 6 p.m. If you'd like to see our property, well, if you can find it, you're welcome to come see it. You know what I mean? So let's tell them today. Welcome to the Prefect Perspective Podcast, where us, the realtors, are giving you an open house experience. Right, Ryan?
Real talk. Yes. Realty Ryan. Yes.
Realty Ryan.
I'm out here. Yes, we're trying to give you open exposure to the real estate environment, what goes on, the good, the bad, and the ugly. You know, I want to get some more agents from outside even in here soon, hopefully, if Fabian doesn't mind, and that's pick their brains a little bit, see what they think, and what we could find out about different experiences in the industry.
Right. So, on a similar note, I was talking to a town planner the other day, and I was also telling him I wanted to pull him on this podcast. You know what I mean?
That's lit, yes.
Because I think that would be exciting to really hear from someone who dictates whether or not you are doing what you're supposed to do in a whole municipality. You know, you're talking about like someone who would do the same thing for Hartford, Windsor, South Windsor. They're letting you know what their community allows. And I think that firsthand expertise like that is nice. And that's exactly why we're bringing on other agents to expand your horizon. You know what I mean? Right. You know, we are brilliant people, but I'm sure you want a little something different. A little something better to look at, maybe. But you never know.
On that note.
No, but what you been up to, Ryan? Come on, we can't. What's it been like? Because
not every day could be a sunny day, right?
Mm-hmm.
So I've been dealing with some storms lately.
Oh yeah.
A lot of running around. I'm trying to get outside and enjoy the summer. I'm looking very forward to our quarterly meeting tomorrow.
What?
Right. That's.
Yeah.
Well, it's a
company picnic, man.
Yes, our company. No, we don't say that. We don't call it no. It's a barbecue, if anything. It's a
barbecue. Oh,
I don't know.
But I didn't know they barbecued on Block Island.
There you go. The block is hot. But yeah, like I haven't been doing a lot as far as entertainment or having fun. I've been handling a lot of business lately. And that's why I came here dressed like this today. I know we talk a lot of different stuff about being all professional as agents. I like to show that I wear many hats, literally. And that I'm like straight off the grind to one grind. And it's got as good as bad because it's hard to stay focused when you have a bunch of grinds that you're working on. So sometimes, you fall to the wayside with certain things. It's happened to me in all of the businesses that I've run, where like trying to work a full-time job, manage 2 different careers.
Right.
It can be difficult, but I'm on that paper chase. You feel me? With a, as we talked about last week, a nice balance of living life as well and being responsible.
Yeah. I mean, they could probably tell by the delay of the current episode probably airing today that we was living life. And like, these guys taking a break. They make it. They got a couple views and they don't want to put out any content no more. We just had some stuff pop up.
Exactly.
It happens to the best of us. And like Realty Ryan said, we were multiple hats. So you might think that I look like a cult member today. Nah, I'm just trying to stay in the country. I got my flag. I'm I swear.
Wow, he's not going back, people. For those that don't know, that's what he said. Translation.
But yeah, no, turbulent times. I think we're all trying to get through it. So we got to live life to the best. And as professionals, we also want to let you know, like, we do stuff outside of the daily grind of real estate, which is probably more grinding, depending on where you're at and what you be doing. Crazy. You know what I mean? But, stonemason grind stone.
Well, we're going to use a different word like hustle. We're going to change the terminology. But why do we do it? We didn't said it before.
Mhm.
Like, there's different reasons, obviously, but the main thing most people are doing is just trying to pay those bills, right?
Yo, damn straight.
Or trying to chase a dream or a want, make sure they're taking care of their needs, stuff like that. So, we just like to give you a heads up on some of the best ways to move, even if we're not moving that way. What you been up to, Romano?
Me?
Yeah.
Ooh. I mean, a whole lot of media relations. I would say that's the simplest, because I've been broadening my horizon when it comes to high level operations in communications, and you probably seen some of it reflect in the way we've been putting out content. So just really trying to figure out how to reach people in the best and easiest way possible without foolishly doing things that don't make sense.
Right.
At least I hope that's what I'm working towards. But outside of this, beyond the grind, I was recently in New York. And if you have found my realtor TikTok, then you probably know I've been posting food reviews like I'm on some trend or something. No, I just thought the food was great. Okay. You don't have to hate on it. You don't have to. I'm just trying to be real, because
You be out there.
I'll be hearing some things.
You be hearing some things. What are you hearing?
I don't know. Maybe it's myself.
Oh, you tweaking. I don't be
No,
y'all.
No, I'm not tweaking, but no, I had a great time in New York, trying different foods as usual. But that's like most of what I've been up to in terms of the last couple of days.
So you went to New York to eat?
Yeah. Bro, what do you go to New York to do? Fight people in the subway?
I mean, I don't really go to New York. I try my best to stay out of there. You know what I'm saying? Shout out or not.
Look, if you're not going to New York to eat, what are you going to New York for?
Like I said, I try not to go. Sorry.
No, but he answering the statement while I'm making it. You don't go to New York unless you go and eat. That's all I'm saying. Because there's I'm not looking for nothing that we'd be used to. Like,
that makes sense.
Different cultures in the melting pot that is New York City.
Yeah, that makes sense.
I ain't trying to go look for American food in New York, because that ain't what I'm looking for. You know what I mean? It's not worth the near-death experience in some cases.
Wow.
You know what I mean?
Wow. To get the American food because things are popping off there?
No, to travel in the city, bro. Yo, that city is old as hell. And this kind of relates to...
It is old.
And this relates to the planner that I was trying to bring on here, because it's like, do a lot of people understand the expiration date on some of the infrastructure that we frequently travel on? You know what I mean? Right. So in New York, it's starting to get crazy. It's getting out of hand. Because I was just there, like I said, having a nice time. We went to a bunch of museums. The Met was probably the first one we went to. And then the American Sciences Museum? No, something about sciences. It had butterflies on the wall. I'm sure you guys know what I'm talking about.
That sounds crazy.
It does kind of. And they have like the huge like elephant herds, artifacts from African tribes, all that stuff that someone stole from somewhere.
Damn, got them.
But no, had a great time. I left Manhattan, went back into Queens, and as soon as we left, it started raining like crazy. And I think that was like midweek when we just left, somewhere around like Monday, Tuesday. It started raining like crazy. Subways were flooding.
Wow.
Streets were flooding. People were sharing TikToks and all that in a subway car, and there's just water pouring down the stairs and up into like up to the window.
That's super crazy.
That's wild.
Yeah.
So I'm saying, near-death experience sometimes.
That's insane.
You know what I mean?
Yeah. Well, I guess you was living that life. Shit.
Not even living life, yo. You just gotta be out here sometimes.
Yeah,
live and learn
too.
This thing's
dead.
Yo, what type of charger you use?
Let's see, but I ain't worried about it. It's a little too. You know what I'm saying? We're gonna give it to him, like I said, the raw footage, all that. We ain't about nothing.
Man, yeah, exactly. We ain't worried about it. Here, let me put it. I'll put it in charge. Yeah, now around here we charge things.
You feel me?
We don't just leave it to. Yeah, I can't charge that. Yeah, so you know what I mean. So we try to charge things. I just didn't have the cord on hand.
Yeah, we ain't gonna worry about that.
Yeah, we ain't stressed about it.
So, but we want to keep everybody on track, right? We want to keep everybody heads up, finances right, stuff like that. So, you know, I was having a conversation with one of my OGs today, and
OGs from where?
One of my work OGs. Shout out Brian Sear, OG.
Nice.
We like doppelgangers. I'm Ryan Balanceer. He's Brian Sear. It's some weird, type of switcheroo.
That is weird.
Yeah. So, but great guy, good relationship, and I just like the way he moves. Like I said, always working hard. My job where I work, a lot of people work a lot of overtime.
Mm-hmm.
People are coming in hours early, staying hours late, doing weekends, working 7 days a week, 10 and 12 hours, all type of stuff, right?
That's crazy.
Yeah. And what's funny is for the longest I worked there, this guy never did it.
Did what?
Worked overtime.
Oh,
he straight up just worked a 40-hour work week basically every week and took every weekend off.
Damn.
And was like one of the only people there who I ever seen do it.
Now, how is he doing it?
Because he's financially responsible. So the way he moves, he doesn't. A lot of Americans, like we could blame banks, we could blame lenders. Mm-hmm. We could talk a lot of crap, but a lot of times the burdens we take end up being our demise if we take something that's more than what we can handle. And sometimes, we think what could happen in the future is going to guarantee the right now. And then the future changes and right now is not guaranteed. And now next thing you know, you're fighting to like keep your house or your car, especially you got some fancy car or something like that.
You're right.
So the bottom line is like even back in 2008, 2009, when there was a recession, in the middle of a recession where everyone else was like kind of hurting, I was like on my come up. I was like buying a house, buying 2 cars.
Right.
Like in the middle of it. Why? Because at that point, I wasn't doing that. But eventually, like even me, I mess around and overextend myself with my finances and my credit and stuff like that. Yeah. And it's funny because I know better and I know the right ways to go about it. But when you don't have proper discipline or you just want to move a certain way because you want to move, you're not worried about today or later and you living in the now, then, you might have to learn some hard lessons later.
Right.
So
you get sticky.
Yeah,
say simply.
Yeah, that's the least. So long story short, me and him talked a few times. He's told me how he invested in his own property, but instead of buying a house, he actually built his house from the ground up.
Oh, I mean, how long ago was that?
It was a long time ago. It was probably like 30, 40 years ago. It was not something that I would recommend doing today.
Oh, yeah.
Material costs alone will whip you.
Unless you can cut down a tree and process it, like
do it yourself.
Nobody's own, you know what I mean?
That's the real DIY.
Yeah, that's what I'm saying. Like, if you can do proper carpentry, like Jesus level carpentry, I mean, not like snap and there's light, but like use a carpenter. So wild. If you can carpent, you know what I mean? That's not hard. If you can do carpentry, you are already a step ahead of everybody.
But could he put up a piece of sheetrock the same way he could turn some water to wine?
We ain't test him like that yet.
Oh, all right. So we don't really know, was he like on that level? No pun intended.
Nah, we about to get somebody pray. Somebody pray.
Yeah, I'm going to hell.
Somebody
say Jesus was a garbage carpenter. Wow. Yo.
Relax.
Chill, slime.
But he be saving the carpenters. You know what I mean? That build our houses.
So even if he didn't build a nice house, he saved the cats who do. Like, Jesus, you always building them shacks, the shit sideways and leaning.
Mm-hmm.
It's like, that's okay. I have 12 disciples. We're going to tidy the next one up.
Free laborers.
Oh, that's even littier.
Mm-hmm.
Let me find out.
Mm-hmm. Yeah, that's the type of suffering you need to be saved.
That's real.
Working on a shift.
Piece of bread for each of you.
Back in the day when there's no overtime or time off or lunch.
Yo, that's wild.
Yeah, no, that. Ooh, no. I can imagine that, but I couldn't because it's sinful.
You're wilding. You talking the slave labor?
Yeah, the slave labor of the 12 disciples.
Oh shit. Were they really slaving like that? They were slaving for Jesus?
No way. I'm not a Bible expert. I can't tell you whether they
Alright.
were slaving away for Jesus or
All
not.
right.
But as it was interpreted, they did stuff.
Yeah. And it wasn't getting paid. So
Yeah,
who's to say?
I didn't hear about any exchange of money.
Who's to say?
I'm sure there's a proverb for that though.
So back to what I was saying. So my peoples, right?
Yeah.
So on top of figuring out that he could kind of build his own house cheaper
At the time, yeah.
right, at the time, because we don't recommend this. The thing that he did that I thought was great was he realized, a lot of people don't realize when you're buying a house, I want to say I mentioned this before, but there's a part at the end when you're signing all your documents with the lawyers at closing day.
Yeah.
And they give you that paper that shows you the maturity of your loan.
The amortization schedule.
That's the one that shows
each individual payment for every single month, for every single year.
Right, yeah. The 30 years, right?
Then it shows you the level between the interest and the principal and the insurance and the PMI, all that shit. Yeah.
And forget all that. When you look at just the overall total amount paid over the 30 years,
yeah,
it ends up being
sometimes double.
Yeah,
sometimes even double the amount.
2.5%, 250% of what the house cost you. Right. A $200,000 house might cost you $450 or something crazy after all of the interest. So now this is one thing as an agent, I'm almost embarrassed to say of my understanding of it, but this is what I know he did. And then my question afterwards was this, basically from the jump, we all hear that the interest is in the front of the loan. Right. Right. So I guess what that means, we should have Christian here or someone like that, is that your principal to your interest and extras kind of does a flipperoo as time goes on. Yeah. Right? Mm-hmm. But to this day, I don't really get that concept because even my house, without me paying any extra stuff, say over 13, 14 years of a house that was almost $190,000, I'd only paid $50,000, which is I guess a third of it basically. Right. But it still was it seemed like I didn't pay anything in comparison to what I still owed. I wasn't halfway done and it was almost halfway of the time. And I still had it was 130. When I was about to sell my house, I owed $130,000. And I was 14, 15 years in on a house that was not even 190.
Oh yeah.
Right?
Wow.
So without paying to your principal, you risk something like that. Now, what I was saying to him is, the way you're knocking off interest is if you're putting money on your principal right from, say, the first month you get your house, and every chance you get, you're throwing hundreds of dollars at it. Yeah. Then, you're going to end up paying your house off a lot earlier, but also it's going to be cool because you skip out on all that interest because you paid it off earlier. Right. Instead of interest for 30 years, you had interest for 8, which right there, you save bundle of money.
A whole lot of money.
You know what I'm saying?
Sometimes hundreds of thousands of dollars.
Right. So my friend, he paid off his house in 8 years instead of 30. That's pretty insane.
That's hyper speed.
Right.
I mean, and that's all investing back into himself.
Exactly. And that's what he understood, that he was investing back into himself. And that's something that people should understand today. One, that when you're shopping, although the prices might be a little bit higher than what we're used to. Yeah. As long as you make sure it's within your range and you have room, you should be good. And if you do have that type of room and you can put a little extra when you have extra, you're going to bring down those payments and put yourself in better position.
Yeah. And not to get anyone confused with maybe something that we've said before and what we're saying now. What we're saying now is that paying towards your principal is always the best thing to do. Right. Yes. When you amortize a loan, you have a lot of front end interest compared to the back end. Sometimes it's not really 50-50. You don't get halfway and then it just drops. Like
Right.
it'll still feel the same gradually over time.
Right.
Whereas within the last couple years or several years, if you ask a proper lender about this, because I'm not an expert, they'll tell you, yeah, that's when you'll really see the interest go down. So even that $180,000 house, even that long, it didn't feel like you were paying shit. So when this guy paid it off in 8 years by just dropping a proverbial bomb onto the principal,
Right.
that is the wisest choice. We
He's
say
hitting in the head, something vicious.
right. We say you marry the house and not the rate,
Right.
because you have the option to fight your interest rate by refinancing. But that's not the only choice. You have multiple choices. So you could also pay down the interest quickly, and then no, not the interest. You could also pay down the principal. All right, guys, not interest, principal quickly, and then you wouldn't have to pay as much as accumulated interest over the life of the loan.
Right. You're still gonna be hit with interest because interest accrues daily, basically.
Yes.
But it's nowhere near as much when you're paying at it, because you're once again cutting down that time frame of paying that interest. When you start taking that type of time off, now you cut down that amount. So whereas we said you might end up spending 250% for the house, doing an actual 30-year mortgage, you hitting it in the head with the principal, will knock it down drastically. And maybe you'll spend, I don't know the numbers, but you won't have nearly as much interest. I don't want to even really put a number on it, but it's to say that it's not going to be 250% or 150% if you're hitting it in the head like that. And there's a lot of cool stuff you could check out. If you check out some stuff on YouTube, it talks about something called velocity banking, which is kind of crazy.
Velocity banking?
Yeah, it's for people who basically are making good money, have good credit, and have credit cards with a high available balance. It's basically you're borrowing against the credit card, you're making huge down payments on your principal using that money, and kind of paying your bills with it. It's kind of you start leveraging your credit to pay off your house. You have to look it up. Check it out on YouTube. Somebody at my job put me onto it. It's basically like this. Hold on. Let me get it to you like this. Let's say you borrow $15,000 from your credit card, right?
Yeah.
And then you take 10 of that 15 and put it right on your principal. You just hit the principal with $10,000. Now you take that other $5,000. Let's say there's a $20,000 credit card, so you still got a $5,000 buffer, right? You didn't hit the limit. You're at 75%. You take that other $5,000 and you're gonna use that to kind of pay whatever little bills you have that will cover for that month or 2 months. But in the meantime, you're taking your paycheck and you're just hitting in the credit card back in the head. So you take, say, 5, 6, 7 months or whatever the time takes you.
Yeah.
You're kind of leveraging your bills more on your credit card and just using all of your worked for money to pay it off. As long as you're not upside down, what ends up happening is slowly over months, you end up paying the card off because you're treating it kind of like you would treat the mortgage. But in the end, you're doing the same thing over, grabbing that amount, dumping a huge amount on the mortgage, and then paying back the card. If you look it up, it's called velocity banking. Does it work? Yeah. I don't know. Never tried it. But theoretically, looks great.
So I pulled that up, right? Because we gotta check this, right? And real quick, this is a fast search. So this is Google AI. Take it with a grain of salt. The court. So I'm gonna read this and you gonna let me know if this sounds like what you're talking about. So in concept, right? They're saying an overview of what velocity banking is a debt repayment strategy that leverages lines of credit, particularly home equity line of credits, HELOCs, to accelerate mortgage payoff and other debt reduction. It involves using the line of credit as a primary account to funnel income and expenses, aiming to minimize interest charges and pay down debts faster. Here's a breakdown. The core concept is you use the line of credit as your primary account instead of a traditional credit account. Reset, right? Instead of a traditional checking account, the HELOC becomes a central hub for all income and expenses. So that means that you're pulling a kind of, like Ryan was
Line
saying,
of
a
credit.
credit card based off of your house, and you do all of your expenses back into the line of credit, but then you pay towards the HELOC in place, well, as a part of your mortgage, because then your HELOC is again an equity line off of your house, so it becomes a part of your mortgage.
I don't really like the HELOC as much.
You know,
I would rather put the concept there with a credit card because I don't like things that basically turn into super long terms.
Mm-hmm.
You see, if you do a HELOC, well, HELOC probably does have option. I would say probably minimum 10 years to 15 years. But it's like if you're using a credit card, you could pay that back whenever. You could pay that back as fast as you can. And like the average person with good credit may have 20 to 30,000 on a credit card that they could leverage. So they don't have to do a HELOC.
Mm-hmm.
And then you'd have to look at the interest because, I mean, if the interest works out better on a HELOC, then you go that route. But if the interest would be less by you just using your credit card, which I think was another thing, you know, that they talked about. But I watched this on YouTube.
Right.
I didn't Google it. There was a point in time where I used to like type everything and only read like off the web. That would be how I research. And I really hated to use like videos for education. I wanted to read like it was a book,
Really?
you know? And over the years, I've kind of like switched over, but it's always good to like research whatever you're hearing,
Right.
even if it's from us. You see how fast I said something, this man pulls out his phone and checks it ASAP. Like you have to do it because even when I'm telling you, I watched a video on YouTube. I don't know this theoretically, and someone told me about it, but it seems like
It's
it will work.
workable concept. And I understand the HELOC versus a credit card because not always is it the case that you will get the opportunity to have a reasonable credit card that is
Right.
less than 24% interest. You might be able to get a HELOC from a from your own
Like
credit
lending
union or something. Right. And they always give you real nice offers. So they might give you like a 7-8% if you get lucky on a HELOC. And that's a 7-8% line of credit that you're now dumping your credit cards in, like almost like you're washing cash.
Yeah, but once again, yeah, I guess that's good. But if you're doing something like that, then to me, you're not having the proper discipline in the first place, which is leading you to use something like that. That's why when I mentioned this, I'm speaking of it as a way to pay your house off faster.
Right.
If you got cards, like I'm not a debt specialist or anything like that, but I'll just say if a person has cards, credit cards, balances that are very high, then you need to bog down, be responsible, you know, and pay them off. You have multiple options. You could shut it down, and that way it stops accruing interest, and the balance, you know, stops growing. But if that's like I always say, if that's your oldest account, you don't really want to shut it down because it's gonna not only have a drastic effect on your credit due to the fact that you're negligent so much, but then when you close that oldest account, now you lost the account history. Right. And I know that people, you know, hate that I always bang them in the head with the credit stuff, but credit is something that so many people seem like they don't understand. And it's something that, as I said time and time again, is so important in America.
Yeah. And it would make sense if we weren't in the US and we were talking about credit and like, what the hell are you guys talking about? Right. We don't care about credit. No, in the US, it's a huge thing. It's too popular, honestly. It's so popular that if you don't have good credit, you will struggle to find even an apartment. And I'm not even buying a house, man, just to get an apartment. You know, just think about that.
You don't have good credit, you struggle to get a cell phone.
Much less.
Like,
you know, there's some government programs that come and go that can maybe help you out, but don't expect no state of the art. I mean, maybe a standard smartphone because tech is getting better. So even the government dollar phones will be a smartphone.
Right. Do some research on filing disputes. Can't say for sure that works either, but that's another option of what they say. I've thought about doing that with some of my stuff.
Yeah.
instead of dropping tens of thousands of dollars on paying off credit cards. Well, if I can file a dispute and show some discrepancy or something like that, that's gonna wipe that away, and I can save that money. Might as well, right?
Exactly.
So, but my people is basically, he paid his house off like that. And I just want people to understand that that's a huge part. And it actually affects your credit as well, because when I was doing a seminar or something a couple years ago, and I pulled up my own score through Capital One.
Yeah, I remember that.
One of the things it said was that, like, it said something like basically like my mortgage wasn't paid down enough, or, wasn't low enough in comparison to how long I'd had it for, which for me, that was a brand new thing. I didn't even realize they were monitoring things like that, because maybe if I did, then I'd have put more of an effort towards paying towards the principal, because I understand that is a double win. I'm lowering my mortgage, or it's a triple win. I'm lowering my mortgage, I'm saving on interest, and I'm bringing my credit up.
Right.
Who wouldn't want to do that?
And I think a part of that, though, is still they change rules quite often.
Yes.
Maybe not outward in the public. So you won't know that they started considering that your mortgage needs to be at a certain level for you to have a good, at least a background percentage towards your credit score. And then one day you check Credit Karma and your credit score dropped 20 points. And it's because you missed a payment, but you made it up, but then it sets you back because you didn't pay towards the principal. So you're a little bit behind. It can get confusing. But yeah, sometimes things change, especially like the buy now, pay later apps. There's changes coming to that too. So they're going to start reporting those to credit bureaus at some point in the future. So if you're kind of tucking your debt out of the radar with those, you got to watch out, because again, they might just change it on you last minute. And then you'll log into your Capital One, you realize that your $4K worth of debt that you tucked away on Shop Pay or PayPal's buy now, pay later app, or Affirm, or whatever it is, you'll find out that it's a part of your credit score.
Oh, definitely. It's all on there. A lot of times. And hey, what's the max credit score right now?
You asking me?
Yeah, sure. Why not? You guys, I can't see the comments. Y'all can answer. What's the max credit score right now? What you got? We can't hear or see you because the only device I have is over there. I moved the laptop to the side. But is that your final answer? What? So the max credit score was 800. Even though some people have told me that somehow they exceeded that. I can't confirm or deny because I haven't. But it was recently changed to 850.
Oh, 850. Oh, okay.
850. So the max amount you can have on your credit score now is actually 850. And yes, a lot of laws have changed on credit and what counts and what doesn't count, and how your score is going to be penalized for that. I know that they were talking about not allowing people to possibly use, or I'm not going to say not allowing them to use, not showing trade lines when you put someone as an authorized user on your card. So like, right, you got those main things that affect your credit. So account history, right? Open accounts, basically like your debt to income on those accounts. What else we got? I don't know the other ones. I can't think of them right now.
Yeah.
Right?
There's a long list.
Yeah, there's a long list of them. But basically, once you... Damn, I lost my...
you got some purple Fanta. You need something to drink. You know what I mean? Explaining credit can really just...
Fry your brain.
Take the life out you.
Fry your brain. So...
Gone.
Okay. Let's try this again. So...
From the top.
I ain't got it. I lost my damn train of thought, y'all. But the moral of the story is have an 850 or to have an 850. There's a lot of things that matter.
Yeah.
Oh, the accounts. Yes. I'm back. So before you could use an authorized user, Because
Yes.
one of the main things is, like I said, the account history, right? The amount of time you've had these accounts open.
Right.
So a person with like a perfect credit score has to have like, say, I think it's like 30 or 40 years of account history. Can you have 30 or 40 years of account history?
Not before I die.
Well, I'm saying right now, at your age, can you have 40 years of credit history?
Hell no.
All right.
I'm not even like at 30 yet.
Okay, exactly.
Like,
so now, but if your mom had a credit card and she put you as an authorized user on that card and she'd had that card for 20, 30 years,
right,
it would report like you have that card and it would report on your history as such. So that was a way to get around that history issue.
Right.
By using someone else who's had the history and then them putting you as an authorized user.
But that's to have such a long history is a requirement, but people not physically be like, it just doesn't.
But that's the point about credit is that there's things you can control.
Yeah.
There's things you can't control.
Exactly.
You have to control what's in your means of controlling and keep those things on the up and up until those other things. So my main reason of why I would say this would be this. If you're someone out there who works, who has a job, who does what they're supposed to do financially, handles business, stands on business, but you don't have no credit cards, you're doing yourself dirty in America. Right?
Yeah.
Right. Because if you're like 30 plus and you don't never had a credit card and you've never financed a car or all you've done is finance a car, then you have this one trade line for however many years that's showing. And that one trade line got you like over 600. And then after that, you never opened any other accounts and you're wondering why your credit sucks. Well, you need to have more accounts. You need to open up a credit card and you don't need to max it out. But guess what? Like I said before, they give you one starting and it's 500. The best way to get it to 5,000 is to keep running it up and paying it off. I'm not going to go through the whole thing, but that's what you do. So you have to establish these accounts. Right. So, you know, people have to teach good habits to their children. Credit cards are not for emergency. Credit cards are to use for rewards. Really? You know that? You know that?
Yeah. I mean, that's why I'm getting some of the ones I have.
Right. You get your cards that give points for the things you like to do. So if you like to travel, then you get a card that accumulates frequent flyer miles. And then now when you make regular purchases that you planned on, money you plan on spending anyway, you use that card and then you pay that off. Well, you're accumulating those points. The dollars you're using can't do that. It can't be turned into any bonus. It can't be redeemed for anything more than what it's worth when you use it. Right. So like they're not for emergencies. If you have a $5,000 credit card and you have no money in the bank and a $3,000 emergency pops up and you think the best solution is to use that card and you've been living check to check, how are you going to pay off that $3,000?
Yeah.
So now you got an emergency and bad credit. Now, if it's life or death, I mean, go take care of that emergency, but just know that creditors not going to care as long as you're still alive. And even if you're dead, they're probably going to go after the people who you love and who love you. After the fact, they'll be responsible for
they're
it.
Vicious.
So
they can get real nasty.
You know, build that credit, buy a home, buy a multi-family home, whatever. And if you buy a single family, then do what my boy Brian did and pay it down ASAP as quick as you can. That way you can establish equity to pull one of those HELOC line of credits that he was talking about to maybe do that velocity banking. See how we circled all that back around?
Yeah, man.
Man, I rebooted good. Yo, that reboot was crazy, cuz more grape juice.
Great fan of yo. I haven't had great fan in a minute.
So, yeah, I'm bringing up my inner me, inner us. But
what you mean by that?
I mean, I don't know what I'm just saying.
Yeah, you want to explain. So,
I mean, we have all the flavors upstairs: ginger ale, Coke, orange soda, grape soda.
I'm looking at this open house sign. So you pulling up to the open house? We're gonna be saying the same thing. You know, we should do like our open house live, which I think I've said before. We got a lot of lives we got to do still.
Yeah, we starting off. I mean, it's not easy doing it live. Look how I just had a brain fart in the middle of it, and I had a recoup, and luckily it popped back in my head in a decent amount of time. But it's not easy, but it's good to be interactive with the people.
Oh yeah,
that's what we do it for, right?
Yeah, no, definitely. Speaking of lives, I think I was talking. I don't know if we were talking about it on camera or not, or before, but like my endeavor with TikTok Live.
No, speak on it.
That's been fun. Eventually, I want to get into just doing some like real estate work, going live, answering some questions. But I was doing it for when I was building my PC. I went live. I just set it up so you can like see us building the PC and us messing up at some stuff. But we fixed it. We fixed it. Don't worry about it. But I wanted to open it out to anyone who's also experiencing the same kind of challenges building their own computer. And we reached somebody. Somebody literally was like, "Hey, I've been having issues daisy chaining my PC fans." And for anybody who's watching, you know the cool multicolored lights in high end computer builds. Yeah, those are just fans, but with lights on them. But those fans, usually to make all the lights of them light up, you have to like clip them together.
Right.
So mine was a little bit more fancy, where they were kind of like like when you charge your Apple Watch, you just put it on a base, or your Android watch, you put it on a base.
Right, it's like a magnet.
Right. So there's like a magnetic like clamps that clamp them together.
Yikes.
That once they're clamped, they're kind of secure to each other, and then they're daisy chained through that physical connection instead of having to plug in more wires in your PC. So my shit was my stuff was like clip, put in one wire at the back that runs into the PC, and then like a controller in the back, and that's it. Very clean setup. But this guy, I guess he had the wire, so we had to like pull up a video and explain on live like how to actually do it.
That's tough.
And I sent him a video because maybe he ain't heard me, because sometimes he was jumping out the live and coming back. So I was like, let's help him out. So that's why I'm probably going to start doing some more like regular lives, just to see if I catch an everyday person.
I would love to be able to do that with the real estate. I would love to give people tips and tricks. We do it all day, just talking to people on a regular. Mm-hmm. I do it all day at work. You know, I tell people I ain't charging you for this knowledge. You know what I'm saying? I want to see us up. So I give it away for free all day. But if you decide you want to buy something, come shop with me or Mono. Anyone else here at the brokerage.
Nah, I mean, you kind of gave it away there, because your external monitor you showed me a minute ago, that should be good. That should be good. I want to do something where if we do a live on one of the platforms, we can like at least answer questions real time.
Real talk.
By trying to build that following. I think in terms of that activity, if we're not doing it on Twitch, TikTok Live makes a lot of sense.
Yeah, we're gonna do that.
We could probably just double stream too.
Double, triple.
TikTok Live and Facebook. It's probably not too crazy, but just so we can get some input from other people. Because as a real estate podcast, the core of what we do is helping other people live their lives. Mm-hmm. So getting people involved is the solution to the sustainability of this podcast. Right. But on top of that, we also want to get connected to other professionals. So just like I got a planner coming, Ryan got a plenty of clients and other professionals that he's trying to bring on here. So we hope that everybody subs up, and while you're subbing, you understand that you're in for a long ass ride, so long as we out here closing on houses. Right. But even if we didn't close on houses, we'd still be bringing you information as people involved in the field, because that's just the professionalism in us. You know what I mean?
Talk.
Once we locked in, as a community, we locked in. So we're hoping that we start hearing from you guys. We have quite a few viewers, but we want to hear a lot more in the comment sections. We want to see that you guys are out here. You got questions. You're living life. Doesn't matter your city. Doesn't matter your state. No matter where you are, even in the whole world.
Yeah, we'll do some research for you if you're in another state. We'll tell you what your state say.
Yes, I am confident in it being able to translate using Google.
Real. Yeah, we enjoy the love. We appreciate the subscribers, but we trying to make our viewers the focus. So just please be as interactive as possible. That's why we take the time out. That's why we put ourselves to the test, doing what we do. We come to you very real. There's no script in what we do. We discuss what we want to talk about and we get out here and do it. So that's what you get. So if someone has like a little brain freeze or whatever, Romano got to reel it in or I got to reel it in, whatever. That's what we do. You know what I'm saying? But we appreciate you guys. Keep watching. Keep up with the lives. Like I said, normally we record on Wednesday. Yeah. We had some stuff coming up this week. We pushed it back a couple of days. So it is a Friday, July 18th. Mm-hmm. Everyone have a beautiful, safe weekend. And we thank you all very much.
Yeah, we just dated the hell out of the video. But okay. Like he said, this may have been a shorter one, but we definitely want to catch y'all in the clips. And if you'll see in our shorts, please like, comment, and let us know if you think anything we said today was out of pocket as hell. We take the hate and the criticism and the positive stuff even more to heart. Not like offended, but like I'm running on them. Deuces. We want to hear from you. Have a good one.